And of course, we can talk about the latest and greatest BLS revisions to the employment report. Yes, folks, revisions, folks, but let's get into it. Let's first start with Nvidia. Nvidia was the talk of the town this week. Everybody was waiting for it. Would it report a blowout? Would it miss? Would it, what would happen? Would the entire stock market roll over? And if you watched my interview with Dan Bird over the weekend on Sunday, I shared with you that I believed Nvidia is very much like the early days of Cisco Systems. What did I mean by that? When the internet was very new, Cisco was the right answer, right? You didn't get fired for buying Cisco gear. What eventually happened over many quarters is competition showed up in the form of 3Com and Jupiter Networks and all of these others. But there was a window of time where the only provider of internet gear was Cisco Systems. They were selling the picks and the shovels just like the gold rush. And as I indicated on Sunday, I thought that Nvidia is currently in that vortex where they are the only answer. To be clear, it will not always be this way. There are competitors chewing up their distinct advantage right now. There will be a time where there is real competition, but as the report showed yesterday and their forecast, no competition yet. The right answer is Nvidia. Good for you if you happen to own some shares. I think it popped over $500 or something, so good for you. Rate hike versus rate cut. Our conversation with Taylor from Life Goal Investments this Monday, or maybe it was last week, we talked about the odds, right? What are the futures telling us? And I happened to find an article on that, so I thought I would share with you the current expectations for rate hikes and rate cuts. Now, this data is probably 24 hours old, so there may be some slight revisions today, but here we go. The odds of another rate hike this year, 44%. Now, that doesn't necessarily mean September. It means this year. I believe there are 3 Fed meetings left. So we shall see. It'll be very interesting to see if these odds change tomorrow, right? Tomorrow, of course, is Jerome Powell's much anticipated Jackson Hole speech. We will see how the futures market reacts. Right now, as of yesterday, they moved back or farther out the first rate cut. The first rate cut was first assumed to be happening in May. It is now June. Folks, the market is starting to understand higher for longer. So again, we'll see what happens. I'm hoping they're done. I hope they don't cut next year, because if they cut next year, that might mean we have a significant problem. But right now, the odds are saying 44% rate hike, first rate cut, June of 2024. How about Better.com? I don't know if you remember Better.com, but in the midst of the shutdown, their CEO had a faux pas in execution where he laid off a bunch of people, I guess, over Zoom or something. Looks like SoftBank is trying to take Better.com public. Looks like Better.com is trying to go public. Oh my goodness, Better.com has let go 91% of their employees, and they lost $889 million. Better.com, of course, is in the mortgage origination business, and that business is in a depression. Pretty tough time to go public, but yeah, 91%. Think about that. You had a team of 100. Now you have a team of 9. That's wild. That's wild. BLS, Bureau of Labor and Statistics, have once again come out with revisions. These revisions were to the job growth over the last 12 months. They have now subtracted or removed about 300,000 job creation. We are still net positive. Instead of kind of being around the 300,000 mark, we're closer to the 200,000 mark. It does seem that these revisions are always down, right? They come out high and go down. I think somebody needs to look at their model, because revisions, frankly, should go both ways, not always down. I'm just saying, BLS, be better. But yeah, so right now, again, job market's still strong, just not as strong. Maybe from hot to warm, something like that. On that front, it is Thursday. Weekly unemployment claims down again this week. They're down 10,000 from last week, from 240,000 to 230,000. No noticeable uptick yet. We need to get over 300, maybe even 325,000 to get the Fed's attention. And also the long run average ticked down about 10,000. So again, job market still pretty strong. I still think we are in what's called a rolling recession. In fact, there's an Oxford economist that says the U.S. consumer, that's you and I, are creating an economy that is a rolling recession. So again, if you don't remember what a rolling recession is, you could think of it something like this. The mortgage business in a depression, airlines, travel, red hot. That would be a rolling recession where something is struggling, something else is hot. So we may never get these traditional negative growth. We may never see the big spike in unemployment as everything crashes. This again, for folks that are really studying or wanting to learn about economies, this is not the COVID recession. This is not the Great Recession. This is not the dot-com recession. The closest one you could go back and research if you wanted to would be 1990. That's the one to go back and look to. It's not, nothing is like what we're going through right now in my adult life, but 1990 is the closest thing if you wanted to go back. Earnings, we got a bunch of earnings this week. Obviously we did Nvidia already. Snowflake was one of those companies I was looking at. They are in the cloud software space and they beat top line, beat bottom line and kept guidance. So good for them. Selling SaaS software of any ilk in this environment has to be hard with companies cutting back, evaluating spend, grinding on margin. It's got to be a tough business. It looks like Snowflake executed. Dollar Tree beat top line, beat bottom line, but reduced guidance. Remember, we had Macy's and we had some other retailers really disappointed. Now even Dollar Tree is lowering expectations. Guess actually beat top line, beat bottom line, and highlighted international, not domestic, international business. The CEO highlighted as a particular strength. And then Petco. Yes, folks, obviously I'm a pet lover with Happy and Sunny with me in the mornings. Petco had a disappointing forecast bringing that in, so I would expect their stock to get hit this morning. And then finally, let's talk about the Bootcamp. Again, I'm doing my one-time only, at least I believe it'll be one-time only, 50-person event. We have 21 spots sold already. There are another 30 people that expressed interest, but it's going to be first come, first serve. If you want to be a part of this, feel free to join. Let me just answer these two questions. Who should not join? If you have to put this on your credit card and you're going to pay interest, please do not join. You can save the money, watch my free content, maybe spend $50 on the buy box video and call it a day. Do not do this. If you have to put it on a credit card and you're going to pay interest, don't do it. Please don't do it. Second, if you are rocking and rolling with my standard course, which thousands of you are, you have a buy box, you're writing offers, you're getting deals, no need to come. You're good. Don't take a spot. However, if you are stuck, if you want a little bit of accountability, you want to ask some questions about markets and buy boxes, and you want to get in a group of maybe folks that you can hold you accountable, please come. I am going to treat you like one of my sales reps. We're going to have questions. We're going to have one topic a week, and then I'll have open questions. You will get your questions answered, and we will meet 10 times scheduled, and I'm throwing in a bonus section because we're going to meet actually before we kick off just to make sure we're all on the same page. Again, if you're rocking and rolling or you're going to put it on a credit card, don't bother. Please don't buy it. But if you're stuck, you need some accountability, you want to ask questions about what market or a buy box, that's what it's for. I'll put a link below. First come, first serve. We're already at 21. So I look forward to seeing there. And I think our first call will be the Friday of Labor Day week. I'll send a Zoom out once everybody's registered. Take care. Bye.